back with closing trades right here on ET now. While of course the market is doing what it's doing, the one sector where you're seeing the maximum amount of gains today is the entire cement sector. So let's try and understand what really is building in here. We've got Mangesh Bhadang joining in, who tracks the sector very closely on the show. Mangesh, hi, afternoon. Good to have you on the show. Consolidation always is the buzzword when it comes to the cement pack. But what do you think is leading this fresh wave today?
Hi, thank you for having me. If you look at the stocks that are going up, led by India Cements, clearly it is indicative that most of the stocks which have been trading below their replacement cost have seen some buying. And naturally, it's a sign of consolidation in the industry. But as I said, very difficult to pinpoint which ones need to be the next. But most of the stocks that we had seen, like there have been rumors around the name that there should be some M&A activity going on in those. But out of whack, out of no reason, we have seen some rally in all these stocks now.
No smoke without fire, as they say, Mangesh. So if it does happen, what has been, talked about on the street, what do you make of those acquisitions and consolidation? Do you see India Cement as a good acquisition target, and which other names come to mind?
Yeah, India Cement has been talked about for a long time now. So they have close to 15 million tons of capacity. But they recently sold a limestone mine to JSW, and they also sold a grinding unit in Maharashtra to Ultratech. So they have been looking to pare their debt, and the debt has been on some higher level for some time now. And with very weak pricing in that region, the company had actually not made money on EBITDA level, in the past few quarters. So that is on the ground. But if you look at the current market cap, the stock would be trading at around $85 to $90. I don't see larger companies paying that money for, because some of the assets of the companies are quite old. So I don't see, if the deal happens, probably it could happen at slightly lower valuation than what it is trading at right now.
Beyond the takeover game, purely on the operational front versus the valuation they are trading at, which are the preferred names in your view?
Yeah, so let's see, beyond the acquisition is, as I said, very difficult to time and know which ones are the ones which will likely to go next. But apart from that, we really like Birla Corp and Divoco for the earnings growth that we see in those companies and possible multiples or valuation re-rating story. Rest, we also like JK Cement and JK Lakshmi, but the valuations are slightly in favor of the previous two names that I mentioned compared to these two.
On the pricing, just wanted to nudge a bit more about that because we have been doing this number crunching that for the last 10 years the prices haven't really moved, and even the last many months we have seen there is a price hike that comes, but that has to be rolled back because of the lack of demand. Do you see that changing in terms of the pricing?
I don't think it is because of lack of demand as such. See, demand has been weak in this quarter because of elections. But if you look at previous years, we have had a very good, in fact, we have had a very good 3 years of demand growth in the country. Despite that, the prices have not been up to the mark where they have been. That is because the utilization levels of the industry has been on, it is not optimum, to be fair. So what we see is that the pricing would remain under pressure because competitive intensity is high within the sector. So whatever demand growth that we have seen, the incremental supply that has come up has actually been higher. And also, we have seen a lot of cost declines for the sector. So coal and petcoke has come off. So most of the industry participants have passed on these declines to the consumer, and that's the reason why overall cement pricing is actually down. So we had recently done a channel check wherein most of the dealers mentioned that over the past 9 months, the prices have been coming under downward pressure, but they have been stable for the past 2 months. And there are certain markets, specifically in the eastern side, wherein the prices are as low as back to FY13 and FY14 levels.
Okay, Mangesh, great to have you on the show. Thank you so much for taking the time out and speaking with us today. In fact, let's pick up the discussion forward. Ajay Bagga as well joins in on the show right now. Ajay, hi, afternoon. Cement, you think a missed opportunity, or is there still time to get into any of these names? And do you like it as a theme?
Yeah, it has been a little out of favor, and basically, the volume growth hasn't been that strong. while the input costs have gone up with the raw material costs going up. But there is consolidation on in the sector. And what has happened over the last few years that the players have deleveraged. And then you look at the mega trend of the public capex expenditure, the public infrastructure build out, for which cement is a beneficiary. This is expected, this kind of a move in cement upwards. But I think you have much better growth sectors if you want to play the growth theme. But few of the sectoral leaders can be looked at, as well as what is happening right now is that smaller players are being bid up in anticipation that the biggies will be gobbling up the smaller players to meet their capacity expansion build outs that they have announced. So smaller players valuations have been going up on a merger acquisition kind of a theme. So difficult to play that. It's not very cheap. The sector is not cheap, but the mega trends are in favor of it. I would stick to the top end. If you want to take exposure, then the sectoral leaders should tend to outperform on a 1-2 year basis.
Ajay, you track the global macros also pretty closely, especially some of the names here from the metal and mining pack in India are pretty linked to what's happening to global commodities space. Some of them particularly have strained balance sheets who are taking efforts to improve that by selling stake, etc. Would you play these guys who are kind of improvement on the balance sheet plays, or the traditional steel or aluminum plays? How do you play the metal pack here?
A lot is dependent on China, and especially if you see the moves in copper, quite clearly, copper went to number of years highs or decades highs, and then it has languished because the Chinese demand has not really come through. So the metal, say with respect to a cement is a very localized play, a domestic economy play, while metals are global plays because people can import them in an ideal world. If governments didn't put tariffs, you could source. So right now, I think copper is in a weak spot because it has factored in all the renewables, all the real estate growth, all the construction growth, the cabling, all have got factored in copper. But the biggest consumer, China, was softish, and the Chinese property market, which was about 18-20% of a global copper consumer, has not picked up traction yet. So their copper is suffering.
Sure, no, yeah, the China angle is something definitely to watch out for. But I just wanted to put the spotlight on the auto sector as well, because you have Tata Motors AGM, which is underway, or at least they're meeting the media around that, and they're expecting supportive government policy on EV to continue till the industry is self-sufficient and reaches at least 15% penetration. So perhaps that's giving you an idea as to what the industry is expecting out of budget as well. The overall push towards EV is likely to continue. The company also says that they're eyeing a 20% market share by 2030 on back of the mid-size SUVs that they have launched, and the total addressable market for the company also goes up. Talking about autos, we did also get a chance to speak with the management of Bharat Forge today. They talked about how overall the overseas business is expected to turn around. Defense is something which is firing for them, and of course EV capabilities is something that they have managed to scale up quite nicely. Listen into a slice of the conversation that we had with Mr. Amit Kalyani earlier.
So look, we look at the manufacturing business, which is both defense, industrial, automotive, aerospace, and then later on EV, will all be growth drivers for Bharat Forge. Defense definitely has picked up a lot of momentum, is past the let's say the learning curve, and is now at the point where it will go from incubation to maturity, and then maturity to acceleration.
In fact, not only Bharat Forge, if you look at, there are a bunch of forging companies. Forging is there, RK Forging, Amik Forging, the Calcutta-based company. A lot of forging stocks have done very well in trade. Ajay, this is kind of a market every day. I mean, we are almost talking at 24,000, kind of making a lot of investors sitting on handsome gains in their portfolios jittery. Should one be trimming portfolios, shifting, reallocating, or just ride on?
Very tough call, and only in the retrospect we will know what is the better way out. But I think looking back at allocations, if your equity allocation has exceeded your ideal allocation, then might be time to take some money off. Especially railway defense. I've been saying for some time now, the kind of valuations we have seen, we might have one more rally leading up to the budget today. There is relief that the Lok Sabha speakership went relatively incident-less, and the ruling party could get their speaker in. It's a very important position, and it ensures some amount of political continuity going ahead. So now the next juncture will really be the union budget. So you can expect PSU stocks, railways, defense, as always happens, one more rally coming up. We could ride that, but I think post-budget valuations will start looking the investors in the eye, and that could be a time to get out. But definitely, these are not very easy markets. Making lifetime highs on a weekly basis, so not easy to take money off. But I would say regular money, investing, and look at the asset allocation. And if your equity is got stretched out, then good to take some money off the table. I think post the budget, you might get a chance to re-enter the market at lower levels. Right now, we might just see an upsurge.
Let me take it across to our chartists as well and get in some BTST trades going too on that note. Naresh, let's start off with you. What's on your list?
So first would be a buy on Indus Stars. The stock is on verge of a breakout into new 52-week highs. I'll keep a revised stop loss at 350, target price of 365. Second is a buy on Granules. The momentum continues, fresh flag breakout here. Stop loss at 498, target price of 520.
Srikanth, what about your BTST ideas?
Yeah, I think all these large cap companies are really doing well, and most of these stocks are recovering from their important lows. In that specifically, we like Gas Authority, which is currently trading around 212, 213. There we are seeing some higher bottom sort of formation, and from here the stock can again move back to the levels of 225 or 230, which was its previous highest level. It's a buy at current levels around 213, 213.50 with a stop loss close to 207. And the other stock on which we are bullish is GNFC, Gujarat Narmada Fertilizer, because there also we are seeing good amount of buying attraction. Deepak Fertilizer, Deepak Nitrite, Gujarat, GNFC, almost all these stocks are recovering from their lows after correcting from their highs. Currently, GNFC is around 697, 698. But while looking at its technical pattern, I think the stock has completed its correction and now it's again ready to move towards the levels of 750 to 755. It's a buy at current levels with a stop loss close to 680 with a target of 750.
So that's a view on a couple of these stocks. But Srikanth, I also wanted your sense regarding Reliance. That stock alone is up 4.25%, adding 110 points to the Nifty weight today. What's the view on Reliance? 3,035 on the stock. What's the next level to watch out for?
Reliance has broken its important resistance level, which was around 3,020-25. And the stock was below this level since last almost 5-6 months. So it was like consolidating within the range of between 2,800 and 3,025 on the high side. Based on its technical pattern, now the stock has opened the next targets of 3,200 in next few weeks or months. It will take time, but broadly, I think the stock is heading for 3,200 levels. In case if there is any correction, it will be an opportunity for short-term traders to buy around important support levels like 3,000 or maybe 2,980 levels. But if there is a medium to long-term view, then I think even at this level, it's a buy.
Okay, even at the current level, it's a buy coming in on Reliance Industries. But What else is doing well? ICICI Bank, Bharti Airtel, Axis Bank. These are the stocks, while HDFC Bank is on the back foot and M&M2 is down about 2% in the trading session. CESC is the other stock which is up almost 10% in the trading session. It's sitting at all-time high levels. Let's pull up the stock of CESC. The news flow or the buzz on the street is that there is perhaps some tariff hike which is incumbent as far as the West Bengal circle is concerned, but as of now there's no confirmation. The street is just working with that assumption. But shifting focus away from markets for a bit, because it's going to be a very interesting Thursday, because we of course have that semi-final lined up at the T20 World Cup, but we also have important movie release coming in tomorrow. Let's take it across to Vinny to get a sense as to what's the star cast, what's the expectation with respect to booking, and finally, is this a release which is going to turn around the fate for the likes of PVR Inox?
It will be actually turning around for in terms of PVR Inox, the life, and maybe some improvement there, because the movie Kalki 289 at AD is a superstar movie. We have Amitabh Bachchan, Deepika Padukone, Prabhas, as well as Kamal Hassan, who are starring in the movie. So the star cast is up to mark. The advances that we are seeing in terms of the booking, that seems to be exciting. The movie is launching tomorrow, releasing tomorrow, 27th of June. And yes, on the first day, opening day, the collections are expected to be in the range of 110 to 125 crores plus, and around that mark is what we could be watching out for the opening day collection. Other than that, obviously, when you're looking at it in terms of PVR Inox as well as Cinepolis, in terms of the national data point that is coming in, we're seeing that yes, good tickets have been sold for the first day as well. Advanced ticketing is more than around 37,000, so around 37 to 40,000 already tickets that have been sold for the first day just in these two cinemas. Cinema theatres. Other than that, advances in even the other versions of the movies, so the Telugu version, Tamil version, that is also seeing a very good traction. There is a lot of positive commentary that is coming in for this one in terms of the pre-sales, and if the pre-sales work out as the numbers that we're seeing right now, then maybe we could see the big chance of this being a top one in terms of the opening coming in, at least from the Hindi version side. And this is despite, like you were saying, in terms of the World Cup competition that we're seeing that is there. So yes, the World Cup is going to be there, semi-finals of India-England that we are watching out for, but with that, the Star movie is also what we are watching out for. Keep an eye out on that. Expected to see a bumper opening, creating a lot of buzz, and obviously the costliest ticket so far sold in Mumbai is of around 2,300 is the pricing. We'll be watching out for that.
Time high for any ticket booking, I think. 2,300 rupees each ticket. But the promotions are kind of reminding me of Mad Max and Dune, at least the early posters out there from the Hollywood. Let's see. Let's see what kind of numbers actually trickle in.
Heavy duty star cast though.
Yeah, clearly. Well, that's Dune for you, but Amitabh is looking amazing. What look, huh? Anyway, this guy can just completely reinvent himself in every performance, every time different look. All right.
That's why he's Amitabh
You guys
Bachchan.
clearly all time,
Yeah.
all time. Okay, so that is about Kalki, but let's talk about the market closing. Just 10 minutes away. Nuresh, BTST idea we already discussed with Nuresh, right?
Yeah, we have, but you know, I want to talk about Lodha. I think that stock is down 10%. Let's pull up that if that's the case, or is it just okay? That's an adjustment for me on my screen, but the stock hasn't done well this week. It's been down 10%. Suntech also is down in the trading session today. MCX, MapMy India, of course, is reeling under pressure on account of that trade that happened from the promoter selling stake. They categorically mentioned that they're gonna hold on to 52% thereabouts, not looking at further stake sale. But for now, the stock is coming under a bit of pressure. But overall, talking about Z Entertainments as well, because that stock is up almost 5% in the trading session right now. Mr. Bagga, wanted your take regarding some of these power stocks, and let's include even REC PFC in that matter, IREDA as well, as we were talking earlier, that 54 EC coming to play, and the fact that there was a lot expected in terms of streamlining of the RBI draft regulations, etc. as well. Would you be a buyer in any of the power, let's say generating, transmission, cable, the entire ecosystem and the financiers? Anything you would want to bet on?
Yeah, I think it's a multi-year trend. The power requirement for the entire things that are happening, be it on the EV side, be it on the data centers to run the AI. AI is going to enter every single industry. You will need so much crunching power and data centers to back it. Today, if you look at the US or China, which are using the maximum AI, the power consumption just for AI is equal to quite a few cities. It's become that huge. So the Indian powers sector as such is on a good cusp. Within that, if you look at, there are the financiers, there are the power generators, there are the renewables companies who are bringing in a lot more traction, and then you have the suppliers to all these, and finally the executors, the erectors who are going to execute the power plants, and the financiers. So I would say overall, you can't go wrong in power. You have to look at valuations. Valuations have again run up a lot in anticipation, especially in the public sector financials, and now today's news flow as well on tax-free status or this 54EC being extended has led to some more buying. But look at the kind of numbers: 500 gigawatts of renewables by 2030. It's a order of magnitude kind of growth that's coming by. So I would say well-run companies, both on even on transmission, getting all those renewables into the city grids will need huge transmission lines, and then the suppliers of cables to those, and the makers of metal which goes into those cables. So you have the entire value chain around power. It's become a mega theme, and I would say invest in that.
Why Inox Green saw very good participation as far as their QIP is concerned. Stock is up 5%. Even Ashish Kacholia's name has cropped up in Inox Green. In fact, 2 weeks back, Inox Wind also saw a block coming in where international players also showed very good participation. Shrikant, any view on Inox Green or Inox Wind?
Say like for Inox Green, it is almost very close to its next important resistance level of 183, 185, because it was consolidating within the range of 150 and almost 120 for a longer time. And based on its rectangle consolidation formation, if we calculate the targets, then it should be like somewhere close to 180, 85. And currently, I think it is trading around the same levels. So based on technicals, I think at these levels, it is better to stay away. But yes, if there is any correction because of any reason, then close to 160, the stock is having support. And if there is a very long-term view, I mean to say at least view of next 6 months, then I think this stock can move towards the levels of 225.
That's the word coming in on Inox Green. While today, of course, the flavor from within the sectoral theme has really been cement. But look at what heavies like Reliance, like Bharti have done today. Reliance shot up a good 4.25%. Kunal, amidst Reliance, which has been sort of a slow mover, even banks, I guess, were catching up faster than that. Right. And of course, there's banks on the other end. Naresh, do you think now a bigger move or a bigger catch-up could play on Reliance after this 4% move that we've seen today too? Naresh?
So Reliance could take the lead given that it's hit a new all-time high and it has been testing it multiple times. And all we need is a fundamental trigger in terms of a tariff hike or something to propel that. But the price action today is very strong, and it has come to those levels of 3,025, 3,030, closing well into the positive territory above those levels. So it can say if this continues, it has a minimum target price of 3,250, 3,300. So positive on the stock. And banking also, the trends are still positive. So it's a time to ride on to the position rather than to think a lot.
One stock, Naresh, Raymond has actually shot up 8% in trade. Actually, trigger was that NCLT has approved the 9% now demerger of their lifestyle business above 3,000. Time to book out?
Yeah, looks like, because the last previous high for the stock was around 2,300 where it's broken out from. So 20-25% move done. So either could trim the stock or keep a trailing stop loss below 2,800 now.
Right, okay, that's the take coming in on what you're seeing on some of these buzzing names. But Ajay, we'll let you go on that note. Naresh as well as Shrikant, good to have you on the show as well. In fact,
if you like this video, then like, share and subscribe to ET Now.